Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, January 24th, 2024. So let's just start off at our intermediate term charts here, and as you can see, we had another gap up to new highs today, and the advanced decline, the NIAD, is just not really supporting this move. And we did see, the S&P was up, I think, somewhere in the mid 20s and ended up just like 3 or 4 points. So we're starting to see sellers start to step in, and really the main reason, as I've been going over, is really the valuation end of things. It's just the market does not support where it's supposed to be right now. And let's just take a look at our other intermediate term charts, see what they. And really the only one I can show you is the stocks above the 50-day moving average, because the put-call ratio, that chart hasn't updated yet. But in any case, here it is again. You see stocks that are above their 50-day moving average moving down as the S&P moving up. So we're having a pretty big divergence, and what it's telling us is just less and less stocks are bringing this market up, and a lot of it's, we're seeing many gap higher. So that's really, what's been going on. It's been the trade. It's been pretty consistent really since, late October, and there's really been no rest. And that's what I've been saying, where, things are very, very dangerous right now as far as where we are, how we got here, and what our the intermediate term internals are telling us. So let's go to our regular chart. And just looking at the S&P on an hourly chart here, again, this is the bearish divergence that I've been looking for. I had said when we got here that we didn't have any sell signals on the 60-minute, and what I was expecting was another either test of this high or a higher high, which we did get. And from there, the S&P made it all the way up to the 4,900. Another thing that I mentioned, that the bulls like to make it to the round numbers. And from there, we sold off almost 32 points. So this market's not as safe as a lot of people believe it is. But now to just come back on the for the bulls, they got all the way down to say this 46.81 is really going to be the panic line. The first line of support obviously is going to be right at this 48.26. Also we have a lot of people that have been buying the moving averages, so that's pretty close, 48.28. But really, this is the support line right around that 4800, let's say. If they get below it, then we should see a quick move. They'll probably test the 200-day, but this is really the critical zone that the bears need to get through. And until they do, this buy the dip mentality is going to stay in place. So if they can get it through this support zone right here, the next really support isn't coming in until we're getting all the way down into the 45, where is it? 45, 41. So you can see this is just basically air, and that's the problem with these moves. When you take out support, which the bears haven't been able to, but when you take it out, then it's just there's nothing underneath it until we start getting into regular support. So again, it's just a very risky, trade just to believe that we're not going to get any type of pullback. And as I've been saying, a decent pullback from here especially after this move, meaning where we went from here to here with zero breather whatsoever, would it be a test of the 200-day moving average, where we know that there's going to be buyers stepping in at the 50-day. So 46.74 down to the 4,600. So this on the daily chart, because they have different support zones. This is the really the zone that the bears need to get through. It's 46.78. If they break that, then we're coming down to the 46.11. And then really the next support is 45.44. And if they lose that, again, it's all air until we get down to the 44.45, and we still have all these gaps that are open. So bearish divergences on the daily chart. We have bearish divergences on the 60-minute chart. And we have bearish divergences on the 15-minute chart. So again, we're at levels where support is. If the bulls lose resist. The next support's going to come down 48.45. Obviously, this is just your moving average buy. There's really nothing supporting it except for the moving average. And then, this is the first really major support, 4,800, and then we come down to the 47.15. Upside, if the bulls can take out these highs. Now, this is, I'm going to go to the 60-minute chart because this is just a big bearish wedge right here. And you can see we broke through it when it's not really a well-defined bearish wedge because we just kind of went straight up on it. So there was really no touches unless we were going to make the wedge like this, at which we broke through it and then came back up. And now let's just use it from let's just go from here, let's just say. So this is a bearish wedge right here, and again, we have the moving averages, but it's a dangerous pattern. That's it. And with everybody just looking up right now, and there's really no worries at all about this market going down, I'm very, very suspicious of it, and I would be cautious. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.